another area of the wealth trends, and also an area that requires a fair bit of data, is financial wellness. And so one of the trends is, and you mentioned earlier the next generation that's inheriting wealth, but one of the other sides to that is females tend to outlive their male counterparts. So the biggest cohort of that's going to receive this next sort of transfer of wealth will be the women.
Yeah, it's interesting because, and I think the stats show that more wealth is with women now than with men, just because of that exact reason, right? And I'm not sure that the advisory practices have gotten their heads around what that means yet, and some have, and I think they've been very effective, because I think the men had been focused on returns, whereas the women are more focused on goals and specific actions. Am I okay?
Right.
So a different way of managing your practice is important, and that came through in the survey as well. So we heard that from the advisors, that they saw that as an important thing. We see that as a big theme as it relates to financial wellness, and financial wellness for us is something that we've been investing in heavily. We launched our product last year, or this year past, and we'll be launching our next generation of that in March of 2024. So very excited about that. And the focus there is really on democratizing the ability to have a financial plan, and also thinking about the financial plan from a goal-based perspective. So that for us has been the focus, and right now I think the financial plans are there for the wealthy. They're not there for the mass affluent market, and they tend to be a bit stale in terms of the process. So you get your financial plan done. It's like a book on your desk and collects dust, and no one looks at it ever again. So making that more active, making the data aspects of that in part of the day-to-day operation for an advisory practice, that's really what we see as the big change in financial wellness. And as you say, talking about the transfer of wealth as a great example of that, tracking that behavior and making sure you're providing value to those clients, means that you're going to have a more focused sort of wellness coach, financial coach kind of attitude as you continue to drive your practice forward. And that's what we're hearing from the advisors as their focus. They're going to differentiate using tools like financial plans and financial wellness. They do it today, but they think they can do it more effectively. And so we're trying to respond to that with the right technology.
Definitely. And to your point, this is, I would say, one of the biggest areas because, and you mentioned this, but no one really cares for that 50-page financial plan anymore. Like, I'm sure there's some people out there who still do, but the fact that it takes so long to build one out, and then it's not active. Like, it gets printed and then it sits somewhere and it collects dust.
I think no one's is a strong word. I mean, I think there are good reasons to have that kind of a financial plan available, for some clients. But I think it's a small group. It's not the vast majority of clients. For the vast majority of clients, it's a more active tool set is more appropriate. Maybe it's not quite as comprehensive as the traditional financial plan, but it has a connection directly to the investment tooling, right? So your asset servicing is directly tied into the financial wellness and the plan. That's where real value happens, I think, in that space. So being able to look at, where you are relative to your plan on a monthly basis with real data, and across a bunch of different areas, not just your not just your investment wealth, but also your debt, your real estate, your other assets. And having that view is, I think, something that's really important. And with open finance, with the right tools and a more simplified way of managing the financial wellness so that it can be run by your advisor as opposed to having to bring in a specialist, that is, to me, that's kind of the magic that we're trying to see happen in the market. And I think that's what people want. So
definitely. And again, I feel that, and you brought this up, but the idea of scalability, where it's, yes, traditionally, it took a lot of man hours and manpower in order to generate these financial plans. And I feel also now people have different lifestyles where it's not really the prescription of you retire at 65 and then you do your drawdowns and, maybe you go on vacations and you retire and, you're happy. Now people tend to work for longer. Perhaps it might be part-time. Maybe they're contracting. And so for all these changes, you do need a more dynamic plan, where you can change things more easily. You can move pieces around. You can look at different scenarios.
Plans change. I think that's right. I mean, I think that for all of us, what we thought was our plan when we were 30 is not what our plan really is when we're 55 or 60. And, I can tell you that from experience. And your desire to go sit on a beach might change, right? So maybe you want to do it sometimes, but not all the time. So yeah, absolutely. I think that a dynamic plan is an important part of the way you operate your business, and for an advisory practice and for clients. It's ultimately that's why it's so important. Is the clients are expecting that something more dynamic. And you mentioned, collecting your paycheck, we've been focusing on this idea of decumulating assets. I don't think very many firms have done an effective job of providing the right tools for that. And that's something that we're really focused on, which is, how do you take your many sources of income and in a tax advantage way, make decisions about including part-time work, or other work that you might be doing, and make the right tax advantage decision about how to decumulate those assets and take money out. So that's a big part of what we're delivering as part of our financial wellness platform, and I think it's a gap in the industry as well. So excited about that.
Definitely. I mean, all the focus, it seems, has been on the accumulation phase, not so much on the decumulation, and as more people retire and we have the baby boomers, which is a large cohort of individuals, they're definitely going to need those services.
For sure.
So decumulation is a big part. The other big part of all this is tracking, and the fact that now there's so many different tools out there as well, but you need to be able to go in and say, hey, I want to know where I am today. Like, how do I look? And before, it was very difficult to do that. You would have to maybe call your advisor and have them run a report for you. But now with more lighter tools that are available to the masses, they can very easily go create a little mini plan. It might be for, I don't know, I want to buy a new car. How am I on track to get this? How does my portfolio look?
Yeah, I think there's been lots of talk about doing this and delivering it, but I'm not sure a lot of firms have done it, effectively, right? So I think there's still a gap in the market there, and certainly, that's part of what we're trying to solve for. And so there's a couple of aspects of that. One is the portal and access for the client to get into that data. The other side of that is, and I think that's one of the things, by the way, we heard from the advisors as an important part of the customer experience is providing that right portal. The other side of that is having that financial plan. Like, what are my goals? What's the timeline for those goals? And then how am I doing against those goals is the question you're asking. I don't think there's a lot of places where you can go and look at that and say, am I on track? Not right now. So that's something that I think the industry is embracing now and seeing as important and wants to deliver. But it's still fairly traditional performance reporting that clients are receiving. And very few of the clients, I think, are getting goal-based reports at this point. So, and don't have access to a portal with that. So, it's a gap that needs to be filled for sure, because it's certainly something consumers want. And it's in what we heard from the voice of the advisors want to provide it as well. And they're looking for the firms that they work with, whether that be in the U.S. and RA works with a TAMP, or whether that be an advisor who's attached to a major firm like a bank. They're looking for the firm to provide those tools and give them access to that information for their clients.
Definitely. And again, it seems to be that the shift is going towards giving more control to clients over their assets, and also, I suppose, just having a lot more transparency, because for the longest time, portals were sort of a big invention, and it was a big change because now clients could suddenly go in themselves and see what their accounts look like without having to speak to an advisor and having them send something over. And people have become more accustomed to having transparency into their assets. And I don't believe that's a bad thing. Our new insurance app, myAutoPlus, will give them transparency to insurance. There's all these portals that will give them transparency into their assets. And this just allows them to be more engaged, in my opinion, because they definitely feel like they're a part of the process now, versus just like maybe having a semi-annual or annual meeting with their advisor.
Yeah. I think that transparency is very important. And I think it is about transparency as opposed to control, because I think, for the vast majority of people, they don't feel that they have the expertise to manage their wealth in an effective way, and that's why they need an advisor. That's why they need someone to help them coach their way through it. But definitely, they want to have a view of it. They want transparency into what's happening, and so, and that's not to say that they're going to check the returns on each asset every day or anything like that. It's just more, give me a view of my my situation relative to my goals. Again, I think that's what's missing is, we haven't aligned the goals and the financial plan to the actual implementation of that plan. And we don't track it that way right now. That's not what the industry is doing. And I think that's where we want to take it. And I think that's where it should be going as well. So, so we're excited about that. I think this is a big win for advisors and clients, and for the firm as well, because really it's about delivering super value to your end client, right? So
definitely. And so with CGI, we're of course helping firms with technology, and providing IPs. But we also have a consulting side. So you mentioned a lot of gaps that the industry has, and we have a management consulting team who goes in and who does these analyses to figure out where your gaps lie and how they can help you become more efficient. Can you speak a bit about the management consulting team and some of their activities for the year?
Yeah, I think in the wealth management and insurance domains, we've invested heavily in having the expertise we require. And I think it started out as expertise so that we can make the right decisions about what we were building, and morphed over time into, hey, we can help our clients think differently about how they're going to operate, update and review their target operating model, think about, how they're going to deliver that financial plan to a client differently. And do that in the context of their situation. And we launched that consulting business a few years ago, so it's gotten quite large now. It's a very successful business, and I think there's a great team there that's prepared to help our clients think differently about how they operate their businesses, think about launching additional businesses and practices, And then how do you operate your business effectively and efficiently as well? So a great team there, and we're ready to help. So don't hesitate to call us.
Of course.
Yeah.
We spoke about our VOA survey, but we also have a VOC survey, which is Voice of the Client. Can you speak about that?
Sure. I mean, Voice of the Client is an important part of CGI's overall view into what's happening with our clients around the world, and drives the sort of main themes of what we see in our industry. And this goes to typically C-level executives, whether they be on the IT side, CIOs, or on the business side, so group heads, CEOs of businesses. And they're conducted in person, so we actually do in-person interviews, collect a great deal of data, and then share that data back to all of our clients. This year we did over 2,000 interviews, so a pretty significant number of interviews around the world, and many of those were in wealth and asset management and financial services. I think about 20% of it. So a big number, it's hundreds of clients. And, the data that comes out of that is, it really gives us a good view of where the spend is going to be in our industry, which is great for us. But also it allows all of our clients to validate their views of what's going on as well. So we're taking in the data, but then we're sharing it back, and they get a view of what other clients in their industry are doing and focused on. And we provide that back with a set of themes that are the sort of key themes that are driving what's happening. And they're not unlike the themes that we see in the Voice of the Advisor. There's a few differences. Big focus on cybersecurity. So cybersecurity, number one risk and concern for executives around the world. But customer experience is a close follower to that. Use of data and digital assets to provide value to their clients is a close number three in that list as well. So some very interesting parallels from what the advisor is seeing and what our executive clients or the CIOs and the CEOs of the firms are seeing as well.
Yeah, it sounds great. And cybersecurity, that's definitely a big one. I was at a conference earlier in the year, and I believe they said that it like tripled in value. So it was it went from I think it was in the hundreds of millions, and during the pandemic, it tripled and went into the billions of dollars. And it was the fastest growing industry, essentially, which was crazy. Yeah. Is that it's cybersecurity. But sure enough, you have all these phishing attempts and different fraudulent activities, and it's terrible, but there definitely needs to be a way to tackle it.
Ransom attacks and so on and so forth. Yeah. I think this is a really top concern for our clients, and we need to be vigilant about how we deliver our services. A lot of our services are software as a service. We have client data. We have to make sure that we're protecting that data effectively. And so for us, security is number one. It's probably the number one thing we think about when we're delivering our services to our clients. Of course, we have to back that up with the right audit results and so on and so forth. I think for all of our clients, cybersecurity has become a core part of their job, and you wouldn't have thought that of a CEO 5 years ago, but they have to think about it on a daily basis and make sure that they're investing appropriately in order to protect their businesses. It's a big risk. It's certainly something that we all have to track. So it can be managed though, and I think we and many of our clients are effectively managing it. But it changes every day, so we have to change with it and evolve with it on a daily basis. And I think that's why the industry is growing so fast, because every time you figure out a way to stop an attack, the attackers come up with a new approach, right? So
yeah, they're definitely very innovative. I will say that about that industry. You also mentioned digital assets.
Yeah.
So I suppose let's start with what are your thoughts on digital assets and where you see this headed?
So you're thinking NFTs kind of?
We can do NFTs. It could be coins. It can also, because when I think about digital assets, I even think about IDs now. So because digital IDs becoming a very big thing, and when we think about what we just spoke about.
I wasn't thinking of it in that context, but I mean, certainly I talked to it. I mean, it's this. The world of payments and financials is democratizing for sure, and so we're going to see that happen over time. I'm not sure how fast it's going to happen, and certainly governments are getting involved to make sure it happens in a way that's effective. And of course, we saw a lot of fraud, a lot of issues with some of the exchanges. That happens, I think, at the beginning phases of a change. But I see this as something that's going to take hold and be part of how we operate our businesses. I think for advisors, they saw providing access to digital assets, to coins, and to other NFTs is an important part of how they operate their business. And certainly for many of our clients, for their clients, I should say, they will hold digital assets, and they'll want to have mark to market on that digital asset and have a view of the value of it in their holdings. So, yeah, it's definitely a changing part of our business. I wouldn't say it's the biggest part of our business right now. But definitely, you see the impact. If you look at it 10 years, 15 years, 20 years, it's going to have a big impact on the way we operate.
Definitely, especially considering that you have central banks now that are getting in the digital asset space, right? So,
I mean, who carries cash anymore?
Yeah,
not very many people, right? So why is the fiat currency so important, right? In that context, then, and why not a global currency? So it's an interesting challenge, and the payment industry has always had a challenge with moving money between countries. These coins, the NFTs have the ability to cross borders in a way that other assets cannot. So
well, the idea of a global currency is interesting. But it's very true, the fact that these cryptocurrencies have come in and they have transcended borders. And a lot of the friction that existed previously is no longer there because of them. And there's also been lowering of a lot of different transactional fees. When I think about there were some big coins that people were using for a while to get past some of the union fees whenever you transfer money from one nation to another. And so in order to do away with those percentage points, they're like, we're just going to use crypto.
And as it becomes easy to do, why wouldn't you? Why wouldn't you bypass those fees?
Yeah.
Right? Why pay them if you don't have to? So I think that's that's part of what most people do is they think about how do I operate more effectively and efficiently. So, and if it's a more efficient way to move money, then eventually it's going to become probably a core part of how we operate.
Definitely. So
I don't have a crystal ball on this one though, so I can't say I know exactly how it's going to play out. I just know it's going to be different for sure. And there is a sort of Web 3.0 and virtual world kind of thing happening out there, and how that's going to play out, I don't think any of us really know. But we know there's going to be change for sure.
Well, Web3 is really fascinating, especially when you bring up things like virtual worlds. So you have the metaverse, and there's been a lot of I've heard chatter and interest, I suppose, in like even setting up like virtual like bank branches, for instance.
Sure.
So, we think about what happened during the pandemic, for
I've heard
instance.
of people I know buying, virtual Gucci shoes, it's like, and paying almost full price for them. I was like, that's what you'd pay for them if you bought them at the store.
Yeah.
And that's for your avatar, right? So, it's and paying for that with coin, of course, because that's Bitcoin or whatever is the only way to pay for it. So, it's a whole new world. I'm not sure how it's going to play out. I personally think it's kind of crazy, but hey,
Well, I thought the wildest one, this was the first one I heard, was Decentraland, where people were buying land and they were paying six figures to get land because they're like, this is going to be the prime area.
Yeah.
And so that was very fascinating, but it goes to show that there is definitely a market out there for these types of things.
Yeah. And also, I think we've seen this sort of bubble burst on some of the NFT market at the same time, right? So people are a bit more cautious, I think, now than they were maybe a year ago. Which I think is reflective of the whole market, actually. Everyone's a bit more cautious now than they were a year ago, right? So, so interesting, yeah, for sure.
That's true. People are a lot more cautious, and I know it's funny, but like I feel the meme stocks definitely taught everyone a lesson. That whatever goes up must come down at some point, and it can come down very quickly.
Sure. A lot of people made a lot of money off that too, though. So,
they sure did.
Yeah.
Now, before we wrap up, I would love to hear. I know earlier you said you don't have a crystal ball, but I feel you're quite accurate a lot of the time. So, what are you expecting for 2024?
Well, I won't talk about the economy because I'm not sure where it's going to go. I mean, I read the papers like everyone else. It feels like the world thinks that there's going to be a soft landing for North America, which is good. Seems like the U.S. is a bit ahead of Canada in terms of how that market's going to turn. And so, I would say most people, I think, are expecting to see some interest rate decreases next year and some relief on mortgage rates, which would be good for the financial services industry and good for consumers, of course, as well, in a big way. How that's going to play out in the markets, I'm not sure. So I wish I did. I'd buy the right thing then and make money. I don't think I always do. I think it's good news for the economy. I think it's good news for consumers. For our business, I see a real focus with our clients on smart operations right now. So, we're definitely going and doubling down on that focus, which is how do we provide a way for our clients to operate more effectively and reduce the cost of operating their business, but also become more efficient and deliver more value for their clients. Having that ability to operate in a digital world effectively is important, and it's still a missing link, I think, for some of our clients. There's a lot of hands and toes involved in the process, and reducing the number of hands and toes reduces the cost, but it also means that the data is more accurate, more efficient, and that in the end is good for advisors and good for clients.
Absolutely, and I feel the reducing hands, part of that is obviously always that you're going to retrain people to do different tasks. So they won't just always be doing the same thing that they've done previously.
Yeah, I don't see a big. I mean, we see it in the unemployment rates as well. I don't think there's a big employment issue looming for people with smart operations. Not at all. Quite the opposite. I think there's a lot of focus on how do I use this as a way to grow my business and do more. And so I think that's a real positive aspect of what's happening in the market. And freeing up that capital to invest is what we need. We need to see innovation in the market. We need investment. We need capital investment from our clients. And the industry as a whole needs to see capital investment happening in order to drive growth. So that's how our clients our end clients are going to end up getting value. So.
Absolutely. And I believe it was the Logic. They released a stat a few weeks ago that said that 50% of employees will need to be retrained over the next couple of years as these new technologies are introduced. So it's, as with everything, it's just a learning curve, and it's just a cycle that people need to get accustomed to, because things change and you have to keep up with it.
For sure. Yeah, I think that's absolutely true. I think, as I said, the world's changing. How it's going to play out, I don't think any of us know for sure. But you're absolutely right. I think we can be certain that there will be a requirement for us to update our operating models, update the way our employees work. And that means, new training regimes, new training programs, new ways of operating. And this is where I think firms like us come in, not only in providing tools that allow our clients to implement those changes, but also the consulting, the business consulting, to help them think about what's next for us, and how do we best deliver a value to our clients and grow our businesses.
Right. Was there anything that I missed that you wanted to discuss today?
No, I didn't have a closing topic or anything in mind. We didn't talk much about institutional investing, and I think that's an important aspect of what we're doing these days. So maybe I'll spend just a minute talking about what we're doing in that space, and specifically around things like fund accounting and middle office activities. To me, I think that's an important thing for our clients. They're looking for ways to drive efficiency and to better address some of the cobbled together platforms that they have, so rationalized systems, and it's an area of big investment for us as well. And this is pension funds, this is asset managers, and this is dealers as well. So we're seeing it across all of our client areas. That this is an important part of change. So it's an exciting area. I wouldn't mind. Didn't mind taking a minute to think about. I'd say other than that, wishing everyone a happy holidays is another thing I'd like to share.
Yeah, of course. Well, 2024 looks like it'll be a very bright and fun year. Thank you for coming in. This was a very insightful conversation.
Yeah, and thank you very much. I wish everyone a happy and healthy 2024.
Of course. I hope you enjoyed this episode. If you did, please be sure to share, like, and subscribe, and we'll catch you with the next one.